Speaking of which, today marks 100 days since President Trump took office, and it's been a rough stretch for the markets. The Nasdaq faring the worst, down about 12% during that time, 7% drop for the Dow, 8% for the S&P. Jeffrey Hirsch is CEO of Hirsch Holdings and the editor-in-chief of the Stock Traders Almanac. Welcome to you, joining us here on set today.
Great to be with you guys.
And maybe, if we're going to take how would the market stack up the Trump first 100 days compared with his predecessors, including himself?
It's the third worst. The worst was when Jerry Ford took over after Nixon resigned. That was like the final plunge, the end of that two-year bear, 74 bottom, October for the S&P, December for the Dow. And then number two was 73 for Nixon, which was the beginning of the two-year bear. So not great company. And then just after that was 01. With W and the midst, smack dab in the middle of that, dot-com bust bear.
We've heard the administration itself. I think Bassett has made the Reagan analogy frequently, where he says, in the early part of that administration, the economy tanked, interest rates were soaring. I assume the market was doing quite poorly. And then by re-election, he won by a landslide. Now, Trump doesn't have re-election this time around.
No. And he's got a short time until the midterms to get some things done. I think that's part of it here.
So I'm just curious how that analogy stacks up for you.
It stacks up very well to the Reagan transition, after Carter. And, that year was down about 9% or so. So there were some issues there as well. But, I think there's a lot more going on here, a lot faster. There's, I see the administration a little bit out over its skis. There's a lot of uncertainty. Much different than the Reagan era. And we were coming off some seriously high interest rate situation, back in the 80s there. So a bit different.
You look at the numbers, right? You're a person who has, with the Stock Traders Almanac, carrying on your family tradition and whatnot. You look at the numbers and you look at what they could tell you. Even if history doesn't repeat, it might rhyme. That's the whole idea. So if you look at the numbers and you look at the first 100 days and you compare it in the context of what we just got from you with the other times it's happened or close to happened, what exactly are we in store in the market for, on average, in your estimation, given what we've seen historically speaking?
There's a lot more than just the first 100 days from my view. We had, our best 6 months, which is something my father invented back in '86, the November through April period. The buy in October, get yourself sober side to sell in May, which is what I like to say. And that's negative. So, when bullish seasonality is negative, there are other forces that are more powerful. And when that seasonality period is over, the bullish season is over, they can really have their say. So that's one thing. We had it down Q1. That's troublesome. We've got it down April unless we get something here before the close, that'll be interesting what happens here at the close. So then there's my post-election year seasonal patterns and the history of Republican administrations. We have a page in the Stock Traders Almanac about performance by party during the post-election year. Republicans generally don't do well in the post-election year. Democrats do worse in the midterm year. Republicans tend to come in and sort of take care of things very quickly, as we're seeing here, even more so than usual, whereas Democrats tend to hem and haw and take a little more time to get things done in the midterm. We did have the midterm bear in 22 for Biden. So it's tracking some of those old school Republican years like 73, 57, 69, some of these years that show a Republican administration coming in and really changing things quickly and taking a lot of action. And that leads me to a little bit more cautious stance this year than I initially came out with.
Is it as goes that first 100 days, so goes the term generally?
Not necessarily, but with the down best 6 months, 4 out of 5 were down further and were bear markets. So there's the other factors I think are equally and even more important than just the first 100 days in conjunction with all the other things.
A lot of moving parts for sure. So, all right.